From an ADF housing entitlements perspective, by far the number one query we get all the time is, when should I pull the trigger on my DHOAS? Give me 1 minute, I'm going to go through with you right now. Interestingly, there are some changes that just came into effect on the 1st of January 2023. So this is like super hot off the press information you must understand properly. DHOAS assists current and former ADF members, bunch of veterans that work here, to achieve home ownership. This is not for an investment property, this is just to put a roof over your head to buy your principal place of residence. As I said, from the 1st of January 2023, they've now removed the 5-year deadline for separated veterans to apply for your final subsidy certificate. I've even seen a bunch of stuff on Facebook going, could this be true? Am I really going to be able to get access to my DHOAS now? Absolutely it is. What's this little thing down the bottom here? How they work out tier 1, tier 2 and tier 3, which is 40, 60 and 80% of the average house price, is that as of, this is like financial year sort of stuff, right? As of 1st of June 2022, the average house price, they have determined, the DHOAS have determined it's $1 million for one property in Australia. So I guess what does that mean for you? It used to be like minimum of 4 years of current service, but they've actually reduced it down now to 2. We're already talking to clients of like, I've been in for 18 months, and obviously I'm going to tick over my two-year service real soon. I want to put a plan in place to be able to use my DHOAS. So tier 1 is 2 years permanent service, 4 years reserve service. The loan amount's about $400,000 and now you get $477 a month as a subsidy paid directly onto the loan. For tier 2, it goes up. You do need to have 4 years minimum service, 8 years reserve service, $600,000 loan, and you get $715 a month paid directly onto your loan. What we think from an overall strategy perspective, which gives you maximum bang for buck, if you can wait to tier 3, or if that suits your circumstances, 8 years of permanent service, 12 years of reserve service, you can have a maximum loan of $800,000 and you get $950 a month paid directly onto your loan. This is like a massive game changer. Here's the thing, with interest rates that have gone up a little bit, guess what? The subsidies have gone up a whole lot as well. So for context, tier 3 was about $450, now tier 1's $470. You can see you get a bunch more money coming your way. Pro tip, if you do have a break of service, do 7 years, get out, go work in the police force for a year, come back in the military. That break of service may affect your qualifying period, so make sure you're super careful about that. There's another little interesting thing that comes into play. Your DHOAS lump sum. You can get 4 years of tier 1 subsidy come your way as a lump payment. So we got $477 per month times 4 years. There's another $23,000 that can get paid directly onto your loan. Now, interestingly, and here's a little kicker, there's only 3 lenders that have been approved to provide DHOAS loans: Australian Military Bank, National Australia Bank and the Defence Bank. Can't use a mortgage broker with those, but used at the right time in the right place, there's a bunch of money coming your way.